Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll review 20 stocks that Wall Street smart money investors are buying now. We're going to uncover the inner workings of Wall Street and unveil some of the most intriguing investment moves that have been making waves lately. So before we start, we kindly ask that you like this video and subscribe to our channel for weekly updates. Let's get started. As financial markets brace for an impending recession, astute investors are actively seeking opportunities to protect and grow their wealth. The prospect of an economic downturn may bring uncertainty and volatility, but it also presents a unique chance for smart money investors to identify undervalued assets and position themselves for long-term success. These seasoned investors, known for their deep market insights, strategic thinking, and ability to capitalize on market trends, are shifting their focus towards stocks with resilient business models and promising growth potential. Smart money investors understand that a recession is not a one-size-fits-all scenario. Different industries and sectors perform differently during economic downturns, and careful analysis is required to identify the stocks that are well-positioned to weather the storm and potentially emerge stronger on the other side. These investors have honed their skills in identifying companies with sustainable competitive advantages, strong balance sheets, and the ability to adapt to changing market dynamics. These stocks represent a diverse range of industries, each with its own unique value proposition and growth potential. By examining the investment choices of these savvy investors, we can gain valuable insights into the sectors and companies that have the potential to outperform and deliver attractive returns during challenging economic conditions. It is important to note that while Wall Street smart money investors' strategies can provide valuable guidance, no investment approach is foolproof. The stock market is inherently unpredictable, and investors must exercise caution and conduct thorough research before making any investment decisions. It is advisable to consult with financial professionals who can provide personalized advice based on individual financial goals, risk tolerance, and investment horizons. As we delve into the top 20 stocks favored by Wall Street smart money, it is crucial to approach this analysis with the understanding that investing in the stock market involves risks and that past performance is not indicative of future results. However, by exploring the investment choices of these astute investors, we can gain insights into the companies that have captured their attention and may have the potential to weather the storm of a recession and deliver robust performance in the years to come. With that said, let's take a look at our list of the top 20 stocks that Wall Street smart money is buying now. Number 20. Verizon Communications Incorporated, VZ. Verizon Communications Incorporated, one of the largest telecommunications companies in the United States, offers a wide range of communication and media services. With its leading wireless network and extensive customer base, Verizon benefits from recurring revenue streams and a strong competitive position. During an economic downturn, telecommunications services remain essential, as individuals and businesses rely on reliable connectivity. Furthermore, Verizon's investments in 5G technology and its expansion into media and entertainment through acquisitions like AOL and Yahoo enhance its growth prospects. Smart money investors recognize Verizon's stability, consistent cash flows, and long-term potential, making it an appealing choice for their portfolios. Number 19. Amazon Incorporated, ticker AMZN. Amazon has established itself as a powerhouse in the e-commerce industry, and its influence only continues to grow. With a vast product selection, an efficient logistics network, and outstanding customer service, Amazon has cemented its position as the go-to online marketplace for consumers worldwide. Moreover, Amazon Web Services, AWS, the company's cloud computing division, has experienced remarkable growth and is a significant contributor to Amazon's overall profitability. During a recession, the convenience and competitive pricing offered by Amazon makes it a compelling choice for investors seeking stability and growth. Number 18. Johnson & Johnson, ticker J&J. As a diversified healthcare company, Johnson & Johnson boasts a robust portfolio of consumer goods, pharmaceuticals, and medical devices. The company's wide range of products, including household names like Band-Aid, Listerine, and Tylenol, ensures a steady demand regardless of economic conditions. Moreover, Johnson & Johnson's pharmaceutical division consistently develops and markets innovative drugs, contributing to its long-term growth potential. With a strong commitment to research and development and a global presence, Johnson & Johnson is considered a safe bet during a recession. Number 17. Visa Incorporated, ticker V. Visa Incorporated, a global leader in the payments industry, is renowned for its robust business model and network. With its extensive reach and partnerships with financial institutions worldwide, Visa enjoys a dominant position in facilitating electronic payments. As consumers increasingly shift from cash to digital transactions, Visa stands to benefit from this ongoing trend. Furthermore, the company's ability to generate consistent revenue streams through transaction fees and its focus on innovative payment solutions solidify its position as an attractive investment during an economic downturn. Number 16. Microsoft Corporation, ticker MSFT. Microsoft Corporation, one of the world's largest technology companies, offers a diverse range of products and services that have become essential in today's digital world. The company's flagship operating system, Windows, is widely used across personal computers, and its Office productivity suite remains an industry standard. Microsoft has successfully transitioned into cloud computing with Azure, its cloud platform, competing directly with industry leader Amazon Web Services. Additionally, the company's gaming division, Xbox, has shown strong growth and profitability. Microsoft's robust product portfolio and ongoing innovation make it an appealing investment option during a recession. Number 15. Procter & Gamble Company, ticker PG. Procter & Gamble Company is a leading consumer goods company with a portfolio that includes well-known brands such as Pampers, Tide, and Gillette. During a recession, consumer spending patterns often shift towards essential goods, and Procter & Gamble is well positioned to benefit from this trend. The company's products span various categories, including personal care, cleaning supplies, and baby care, ensuring a consistent demand. With a long history of brand recognition, strong distribution channels, and continuous product innovation, Procter & Gamble offers stability and growth potential to investors. Number 14. NVIDIA Corporation, ticker NVDA. NVIDIA Corporation, a technology company renowned for its graphics processing units, GPUs, and artificial intelligence, AI, capabilities, has witnessed exponential growth in recent years. The company's GPUs are in high demand across various industries, including gaming, data centers, and autonomous vehicles. As AI continues to gain widespread adoption, NVIDIA's AI-focused hardware and software solutions are well positioned to capitalize on this trend. Furthermore, NVIDIA's acquisition of ARM Holdings, a leading semiconductor IP company, expands its presence in the semiconductor industry, opening up new growth avenues. With its strong market position and innovative technologies, NVIDIA remains a top choice for smart money during a recession. Number 13. JP Morgan Chase & Company, ticker JPM. JP Morgan Chase & Company is one of the largest financial institutions in the world, with a diverse range of banking and financial services. The company's vast network of branches and expertise in investment banking, asset management, and retail banking provide it with a competitive edge. During a recession, investors tend to seek the stability of well-established financial institutions, and JP Morgan Chase fits the bill. The company's ability to navigate economic uncertainties, coupled with its strong risk management practices, positions it as an attractive investment for smart money. Number 12. The Walt Disney Company, ticker DIS. The Walt Disney Company, a global entertainment conglomerate, operates an extensive portfolio of businesses, including theme parks, media networks, film production, and streaming services. While the theme park segment may experience some challenges during a recession, Disney's media networks, led by ESPN and ABC, provide a steady revenue stream. Additionally, the company's direct-to-consumer streaming services, Disney Plus and Hulu, have experienced remarkable growth, further diversifying its revenue sources. With its iconic brands, content library, and ability to adapt to changing consumer preferences, Disney remains an appealing investment option during economic downturns. Number 11. Salesforce.com Incorporated, ticker CRM. Salesforce.com Incorporated is a leading provider of customer relationship management, CRM, software, offering businesses innovative tools for sales, marketing, and customer service. As companies prioritize efficient customer management and data-driven decision-making, the demand for CRM software continues to rise. Salesforce.com's cloud-based solutions have garnered a significant market share and fostered long-term customer relationships. The company's strong revenue growth, recurring subscription-based model, and continuous product innovation make it an attractive choice for investors during a recession. Number 10. Home Depot Incorporated, ticker HD. Home Depot Incorporated, the world's largest home improvement retailer, stands to benefit from homeowners' focus on renovation and repair projects during a recession. As people tend to prioritize maintaining and improving their homes instead of moving, Home Depot's wide range of products, competitive pricing, and extensive store network give it a significant advantage. Additionally, the company's online presence and delivery services cater to changing consumer preferences. With a solid track record of financial performance and a robust market position, Home Depot is a stock that smart money investors turn to during economic uncertainties. Number 9. Mastercard Incorporated, ticker MA. Mastercard Incorporated is a leading global payment solutions company, providing consumers and businesses with convenient and secure electronic payment options. With its strong brand recognition and extensive network, Mastercard is well positioned to benefit from the ongoing shift toward digital payments. The company's revenue model, primarily based on transaction fees, ensures a consistent flow of income. Moreover, Mastercard's investments in innovative technologies, such as contactless payments and blockchain solutions, position it as a forward-thinking player in the industry. As economies adapt to digital transactions, Mastercard remains an appealing investment choice. Number 8. Pfizer Incorporated, ticker PFE. Pfizer Incorporated, a major pharmaceutical company, offers a diverse portfolio of prescription drugs, vaccines, and consumer healthcare products. During a recession, healthcare expenditures typically remain stable or even increase as people prioritize their well-being. Pfizer's robust pipeline of innovative drugs and vaccines, including its COVID-19 vaccine developed in partnership with BioNTech, underscores its commitment to medical advancements. The company's solid financials, global reach, and ongoing research and development efforts make it an attractive investment option during economic uncertainties. Number 7. United Health Group Incorporated, ticker UNH. United Health Group Incorporated is a diversified healthcare company that operates across various segments, including health insurance, pharmacy benefits management, and healthcare delivery. The company's size and scale allow it to negotiate favorable contracts with healthcare providers and offer a wide range of services to its customers. United Health Group's Optum segment, which focuses on healthcare services and technology, has been a significant growth driver. As the demand for healthcare services continues to rise, especially during uncertain times, United Health Group's strong market position and comprehensive offerings make it an appealing investment for smart money. Number 6. McDonald's Corporation, ticker MCD. McDonald's Corporation, a global fast food giant, tends to perform well during recessions as consumers seek affordable dining options. The company's well-established brand, efficient operations, and value-focused menu make it a go-to choice for many consumers. McDonald's has also embraced digital transformation, offering online ordering, delivery services, and mobile app loyalty programs that cater to changing consumer preferences. With its widespread global presence and consistent profitability, McDonald's offers stability and potential growth to investors during economic downturns. Number 5. Bank of America Corporation, ticker BAC. Bank of America Corporation, one of the largest financial institutions in the United States, offers a comprehensive range of banking and financial services. The company's diverse revenue streams, including consumer banking, commercial banking, investment banking, and wealth management, provide stability and resilience during challenging economic conditions. Bank of America's focus on cost management, technology investment, and risk management has positioned it well to navigate recessions and other market uncertainties. As a trusted and established player in the financial industry, Bank of America remains an attractive investment option for smart money. Number 4. Adobe Incorporated, ticker ADBE. Adobe Incorporated is a software company renowned for its creative and digital marketing solutions. With a suite of products that includes Photoshop, Illustrator, and Adobe Experience Cloud, the company caters to the needs of creative professionals and businesses alike. As digitalization continues to shape various industries, Adobe's software solutions are in high demand. The company's subscription-based revenue model ensures a steady stream of recurring income. Additionally, Adobe's strategic acquisitions and investments in emerging technologies demonstrate its commitment to innovation and future growth. With its strong market position and relevance in the digital landscape, Adobe is an appealing choice for smart investors during a recession. Number 3. Walmart Incorporated, ticker WMT. Walmart Incorporated, the world's largest retailer, offers a wide range of products at competitive prices. During recessions, consumers often turn to discount retailers for essential goods, and Walmart is well positioned to meet this demand. The company's vast store network, efficient supply chain, and e-commerce capabilities provide convenience and affordability to shoppers. Walmart's investments in digital transformation and omni-channel retailing have further strengthened its competitive edge. With its financial stability, economies of scale, and ability to adapt to changing consumer preferences, Walmart remains a resilient investment option during economic uncertainties. Number 2. ExxonMobil Corporation, XOM. ExxonMobil Corporation, one of the largest publicly traded energy companies, operates across the entire oil and gas value chain. While the energy sector can be volatile, ExxonMobil's scale, diversification, and technological expertise contribute to its resilience. During recessions, oil prices may experience temporary declines, but they often rebound as economies recover. ExxonMobil's strong balance sheet and global presence position it to weather short-term fluctuations and benefit from long-term energy demand. As a top choice for smart money, ExxonMobil offers exposure to the energy sector and the potential for a rebound in oil prices. Number 1. Alphabet Incorporated, Class A and Class C stock, ticker, GOOG. Alphabet Incorporated's Class A and Class C shares provide investors with exposure to Google's dominant search engine, advertising platform, and other innovative ventures. Google's search engine remains the primary source of information for billions of users worldwide, and its advertising platform generates significant revenue. Additionally, Alphabet's investments in emerging technologies, such as artificial intelligence and autonomous vehicles, contribute to its growth potential. As a leading player in the technology industry, Alphabet offers stability, market dominance, and long-term growth prospects to investors. In times of economic uncertainty, smart money investors carefully analyze market trends and identify stocks that offer resilience and growth potential. The top 20 stocks discussed in this video represent companies favored by these astute investors. These companies possess resilient business models, dominant market positions, and diversified revenue streams that can withstand the challenges of a recession. However, it is essential for individual investors to conduct thorough research, consider their investment goals, and seek professional advice before making any investment decisions. By combining informed analysis with a long-term perspective, investors can position themselves for success even in the face of economic downturns. This concludes our list of the 20 stocks that Wall Street smart money investors are buying. Which of these stocks would you consider adding to your investment portfolio? Let us know in the comments below. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Also, check out our link below to see how you can get up to 16 free stocks to add to your investment portfolio today. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.